Hey everybody, welcome to our How to Use YinYang Indicators series. Today we'll be discussing how to identify entry and exit points using all of the indicators in conjunction with each other, how they should be used. So, as you might see, it does look like there is a lot of stuff going on our screen right now, but that's okay, because once you get used to it, it won't look overwhelming at all. So, you might be wondering, I'm sure you are, and I hope you have followed along with all of our other videos on how to use all 5 of these indicators so far, otherwise this might be a little bit confusing. And it's a good idea to understand how each of them works by themselves and then how they all work cohesively as a whole. So basically, one of the keys to trading is knowing when to get in and when to get out. There's a bunch of other factors, like quick little swing trading and stuff like that. We'll discuss that in a different video. This one will be more a little bit of a long-term entry and exit. Not like, we're sitting in it for months, but potentially sitting in it for a little while. That's the key. And getting your own exit locations after you get in is likely going to be a different video and whatnot for if you're doing either a long or a short. This is just identifying good entry and exit points over a longer period of time and like what to look for. So, for instance, let's cover the most recent good entry, which would be right here. This was and is a good entry point. As you can see, it would have paid off decently well. You would have had to had strategic take profits in this range to have gotten out because we didn't actually get much of an exit signal. We just got the good entry signal, but that's okay. As you learn to use our indicators, you will develop your own trading strategies, either by stuff we tell you, which is a good thing to do, or proper tactics, or it's just something you stumble upon on your own and you decide it works well for you. There is no right or wrong with trading, and anyone that tells you different is honestly just an idiot. Whatever works for you is what works best for you, and as long as it's working and you're not losing all your money, hey, don't let anyone tell you anything different. The best thing you can do is just get the information you need and figure out how to use it for what you want to do. So, back to the point. Why is this such a good entry point? I mean, other than our volume being low and the sell volumes average being above the buy volumes average, there's not really anything wrong with this. It's pretty much perfect. We had a really strong bearish candle right here, which generally means there's going to be a little bit of a correction that's going to happen. It took a little bit longer than probably should have, but hey, it still happened. So this purple bar is a very good bar. It means the RSI is correcting and that it is a very strong momentum changed bar. That's what the boom meter bar colors refer to as for these colors that are in the bars. So there's first that. We can tell in our YinYang A that we hit that. We are still below all of the crucial zones with our EMAs, meaning that there's lots of leeway for us to get in there and actually get some movement. Because when you're outside of it, it can only stay outside without touching for so long. So we just touched it, but there's room for us to go at least to the basis line of our Boolean, or is there our Boolinger band? Sorry, not Boolean. I code too much if you can't tell. So this white line right here is our Boolinger band's basis line, and almost always when a correction needs to happen, it will go to that line, almost always. So what else makes this a good entry? Well, like we've talked about in our YinYang B, the ice came all the way down. The regular touched this line. These are perfect. We set up the perfect combo right here with it. The spacing between the two is perfect. The heights are perfect. This is just beautiful. The only downside, like I said, back to the volume, is the volume started pretty high, at least for the sell-off, and then it started tapering down. So it's not as strong of it's not like the perfect combo, but it's, aside from the volume, it's pretty perfect. So what else? Well, Our RSI is super low. The only downside is that the MA is so much higher than the regular RSI at this point, but which sometimes can dictate that it's going to not immediately happen. Sometimes RSI, well, this will happen, and it'll just go boom, and then it just spikes up on a crazy angle going upwards. Unfortunately, this isn't what happened, and it doesn't usually happen, to be honest. It doesn't always do that. Like, this is what I'm talking about with the crazy spike up. Like, it's just like this crazy drastic upwards angle. It can happen. It sometimes does, but usually when they're this far, they're a lot closer here, as you can tell. And there's a higher chance that it's going to do that when they're really close compared to really far apart. It doesn't mean it's not going to happen, but it usually means that it might need a few days for it to get a little closer before it shoots up. So, but other than that, this is a really nice looking RSI. And then what else? Well, we are in a state of fear. This wick was a very strong fear wick. So that's good. And we're still in fear when this had happened. So we're in a state of fear. Our index of fear is very low. It's like 20. Our RSI is super low. We have a beautiful looking mountain curve. Perfect combo basically, aside from the volume. Our volume, it's honestly not very nice, and which is too bad. We have low volume, like very, very low volume, especially if you zoom out just so you can see how low volume. It's super low, and it's more of a sell volume right now than a buy volume. But that's okay, because currently right now live, we have more buy volume than sell volume. The only downside is that this blood diamond keeps flickering. Our RSI just crossed under. Our fear greed is neutral, and our volume is really low. Honestly, like this, it's not looking so good right now. This looked nice, and then I could tell that there was going to be a decent pump, at least to the basis line, that was going to occur here. But right now, this isn't looking so hot. If I had to make an educated guess, I'd say we are going to see it test this trend line right here around 25,450 at bare minimum. It will likely also test our support level at 25,200, I believe it is. And the more times it is testing that, the worse for us. It's already tested this upward trend line twice right here. Yeah, it usually is going to hit it twice, and then the third time it crashes through when it comes to strong support locations. That's how it goes. Bounce once right here, likely bounce twice, either today or tomorrow, and then it's going to do a small correction, and then it's going to crash through probably to around here, 23,800. And we'll see how it's going to go from there, but that is currently what I'm projecting is going to happen right now. It's not looking so good, but that's okay because it is in correlation to Bitcoin's halving cycles. This is normal, it's standard. We will generally see a lot more volume and bullish movement come late October, early November if we are lucky. If not, January of 2024 will likely be very good for us. January is always good, especially before the halving. It's really good. February is not too bad. March is terrible. I don't know what's wrong with March, but it's always terrible, especially on the halvings. It's always terrible. But then April is when the halving is, and it'll start shedding some light. But it's not usually until about June or July after the halving that the true momentum picks up. People are projecting, including we should hopefully, if we're lucky, be seeing a new all-time high near the end of 2024. Some people are projecting around 100K around middle of 2025. If we're lucky, we may see that. Let's go back to getting a little off track here. Let's go back to identifying locations. So we talked about why that's a good entry. Well, let's discuss why this was a good exit point. So this is actually an amazing exit point. I 100% would have left this trade right here, that I also would have entered right here. And let's discuss why. I would have 100% entered there, and I would have 100% exited right there. So The reason why, let's talk about the entry first, I guess. So the reason why you'd enter here is this isn't perfect, but it's really nice. It's still got a nice curve to it. There's a sharp curve in right there on both of the ices. The mountain levels are still in a they're pretty close together, which is honestly a really good thing. Sometimes it's bad if the predictive is too far below or above the regular. It's a little less accurate. It's nicer when they're a little bit closer together. That's a sharp ice cut into the mountain there. We have both the predictive and the regular support cross on the same bar right there, which is a really strong indicator. Our buy volume literally curved into the sell volume on this candle also. Our RSI is very low. That's a very good thing, and it's super close together, which is very good also. That means there's a high probability that it was going to take off at such an angle like this. And our fear greed index became neutral. So that is good. It was greedy here. It was greedy, and then it went neutral right before that bar, meaning that it's no longer greed and it's not fear, it's just neutral, which is honestly still really good, especially with all of these other signals that show that it's got some room to move. Also, if you look, you got the signal when it's already touching the basis. So that either means it's gonna just get instantly rejected and this is a fake out, or it's likely gonna blast through the basis and then it's gonna go out, it's gonna break the Bollinger Band and go outside of it, as you can see right here. This line right here is the Bollinger Band that I'm tracing with my mouse. And you can see 1, 2, 3, 4 candles in a row, 4 days in a row, we were outside of that. So that's generally what you're going to see when you have a lineup of stuff like this happening. So that's what you want to look for entries too. Just everything lining up. You don't always need to enter when there's a fear signal or a greed signal for whatever it's or enter exit whatever. You just need a lineup of good stuff, and that's what we got right there. And now exit. Why would I have exited here? Well, for one, it's just looking at it right here, it wasn't looking too hot. We had too much RSI in here. It's a dark green. This push was a little bit too intense. Our RSI here got really high into the green zone really quickly. We're quite close to the basis line, but we're not there yet. We're super close to the volume range. And we got a fear signal while we're already high up. This mountain, it's starting to curve in on itself. There wasn't much ice on the regular mountain here. It had already curved in on itself here, which is not a good sign for it, to be honest. It started to curve back out again when we got the support here. It almost looked like it could have pushed back up a bit, but we just weren't seeing it. And also, the buy volume crossed under the sell volume all on this bar. So buy volume is going lower than sell. Our ice crossed in one bar before on our predictive, so that pump died right there. You could tell it died by that. That's why this icer is that's so nice to see the ice, because you can tell when something dies. So that died. The regular already died, but the predictive was starting to push out, but it died. Our RSI is super close together, which is either good or bad depending on where you are or if you're longing and shorting. But if you're in a long and they're close together and they're kind of curving in on them when they're already this high up, that's not good. That's definitely bad. And then combine it with the fear, greed, and the index, and that's super high up with a greed signal. Yeah, you want to get out of that. I mean, because you're close to the basis line, it could have just literally hit this and then just came right back up. But you knew for sure it was at least going to correct back to that basis line after this bar. So, and with the fact that we already came up pretty drastically, I wouldn't have been surprised if it had crashed to this basis line and then touched this Bollinger Band right here, hitting off of this extreme, and then it'd come back up. It didn't do that, but I would have gotten out because that's what I would have been fearing happening. And then possibly maybe there would have been a good time to get back in there, or you just sit in and wait. You don't always have to be in a trade. I feel like that's a common misconception that you always got to be in a trade. You don't. Your key is getting in when it's good, getting out when it's not, and then being patient. Like, patience will pay off far more than being greedy and just being like, I always have to make money at all times. I always got to trade. That's how you lose money. That's gambling. What we're doing is strategic investments. We're not gambling here. So let's do a few more, just so you guys start to understand and get the hang of why. Can you tell why this was bad? And can you tell why this was good? Like, I feel like there's just patterns that keep playing over and over and over here. So why was this good? Well, the buy volume crossed over top of the sell volume. Our mountains are beautiful. They're spaced out almost perfectly, not too much, not too little. Maybe a tad closer would have been nicer, but that's still pretty good. The ice sharply curved in right into two bar, or both predictive and regular on the same bar. Our RSI, I feel like this is the only one that I'd be like, I don't know. Our RSI was kind of in a weird spot, to be honest. It wasn't too low on either the regular or the moving average. So it was a little bit of a weird one. But we did just get a fear signal. And then on this bar, once again, it went neutral. So usually what that means is that it's not fear anymore, because there's been enough price movement to say that the market's no longer fearful, and vice versa. If it was greedy and then it dumped like pretty much immediately, it would go blue because it's no longer, there's not so much greed in the market anymore. It's neutralized. So that is a good entry point. And the key also to identifying it's one thing to know when to get in, but like how do you know if it's still going well? Well, that's why you want to evaluate these market cipher signals to see how it's still going. Now, as you started getting up here, why would you want to get out either on around here or around here? Well, it's hard to say if you would, but I probably would. Reason being is you are outside, you're inside the Bollinger Band, but you're outside of the true value zone, which is these little dashed lines coming across here. You're just ping-ponging between the three extremes and your high pivot. You're already high up in the Bollinger Band, pretty much between the top of it and the basis line. There's a high chance it's either, going to just go horizontally across and you're going to hit it, and maybe you keep going, or it's going to go horizontally across and then once you hit it, you're going to crash through, or it's just going to straight up just crash through. So, and I apologize for the dog. I am outside right now, and they bark a lot. So I would probably get at this point. Your mountains they've been kind of dwindling. Like it's already, as you can see right in here, the predictive ice has already crossed underneath. Sorry, the regular ice. The predictive came back out for one last breath, but I probably, I might have waited on that one just because it was still here on this, but I for sure would have gone out here after I seen two greeds pop up, the blood diamond pop up. This was already dwindling. The volume's low. You can tell that the buy volume's about to cross under the sell volume there when it's so low. You're so close to the basis line. You're still above the true value range. The top of the bull is right there. This just does not look good. And I get it went up after that, but it still would have been a good exit point. The key is just getting good exit points and good entry points. They're not always going to be the best. Sometimes it's not always going to be the most amazing time to get in or out. Maybe it keeps going down or keeps going up and you're like, oh shoot, if only I waited. But And just because it's not the best doesn't mean it was a bad one. I feel like that's a common misconception. So you could also see this one here too. This would have been a really hard one to know to go in on though. Like I wouldn't have gone in on this personally, just because the volume's so low, the mountains aren't very low. The RSI, yeah, sure, but that's you're basically saying I'm going to go on a trade just because of support crosses on the same bar with the curve and the RSI and next to nothing else. Yeah, the fear greed crossed over too, but I if you watched our fear greed index video, it's not generally advised to trade on signals or movement when it's in the middle. You want to do it when it's in extremities, and that wasn't that. So we can keep looking for other examples. Here we go. Here's a good exit point right there. Reason why is it's kind of hard to see here. Our sell volume crossed over our buy volume there. The mountains have been dying here, like hardcore dying. The regular and predictive mountain, the regular mountains down there at this point, at one point there. And the ice is just like popping up a little bit here on the predictive, trying to get its last leg of life in before this happened. The RSI is pretty high there. We had agreed. It is now neutral, sure, but we had agreed there. And it's this one, I'd say it's like 70% you want to get out, 30% maybe you chance it. But overall, there's more saying that this isn't a good thing to stay on. Let's keep going. Let's keep going. That one's kind of an iffy one. I feel like this one could have been. I might have. Yeah, I would have gone in on this for sure. Yeah, it's there's just too much niceness going on in our oscillators for me even to said no to this. You know, you got the both support crosses, predictive and regular here. You got the green X all in the same candle. Our buy volume crossed over. These mountains look decently nice, but the cherry on top is that volume is massive on it. Our RSI is very low, and they're very close together, meaning there's a high probability of it going up at a very high degree angle. And we went from fear to neutral, which isn't always amazing, but it's definitely not a bad thing. So I 100% would have bought in there. The hard part would have been getting out in time and not being stuck in this, just going horizontal for, a month and a half straight. I feel like as you trade, you'll start to get the hang of it more often than not, and you'll just know where to see patterns. All right, sorry about that. Had to take a slight little break there, but we're back on track now. So, yes, the more you are trading and the more you use our indicators, the more you'll be able to identify and notice these patterns. When we talk about some weird oddballs, if you have watched our Fear Greed Index indicator video, I'm sure you are aware we already talked about situations like this where you have a greed signal appearing very low, much lower than the 30. It's pretty much sitting at the 18. What does that mean? Like, does that mean you got to sell? Like, is that a sell sign? Like, you got a low RSI? Like, isn't this like a time to buy? Well, RSI speaking, yes. Fear greed, no. A lot of times what can happen is it can be dumping for quite a while, which will put our fear greed quite low. And even though it went this low literally in one day, it can easily happen, and then there becomes a lot of greed in the market. Just our calculations show that there is an irregularity that causes. That's what the signals are. They're irregularity from the normals that display high signs of greed or fear, and so it is 100% plausible that you do get a greed sign quite low like this, and that it's a true greed sign, and they can be just as strong, if not sometimes stronger, than a greed sign that is above. Now, unlike greed signs that are above, which are good times to short or sell in conjunction with other signs, the greed ones below likely won't be lining up with much. Like, it's not going to line up with high levels of RSI usually. It did happen to line up our first one here with, they both actually line up with predictive blood diamonds, and this one actually ended up confirming the blood diamond afterwards. It is possible, just like as you see here, we have insanely low levels of RSI, but it's not like it's impossible for it to keep going lower while the RSI is already super low. Just like it's not impossible during a massive bull run that it keeps going, the price keeps going up, even though it doesn't make any sense. Like the RSI is still like it's so high. Like how could it possibly keep going up? Well, sometimes just the momentum is there and it just keep doing it. So, I mean, it is a lot riskier to say start a short or cancel if you were in a long or you had bought the position to cancel it or activate a stop loss. It's more risky to do stuff like this because it's kind of an oddball, especially with low volume here. You got low volume, your RSI is already low. You don't really have any indication, like your mountains are already below, they're not above. You got like no volume on it, nothing. It's kind of hard to get a definitive answer. It's like, is this actually a good time to like get out or start a short? It's risky. So I'll leave it up to you, depending on what type of trading style you are. But like, as we saw here, this one was a little bit of a fake out. Nothing happened. It got canceled out here. Went to neutral. We got support crosses. Even got the X in the same one with the blue triangle. That's a lot of bullish movement right there. Sadly, it was rejected by one of the extremes, some of the EMAs, and we got a downward trend line going through there. It just didn't mean it broke the downward trend line, but it just couldn't hold through past the Bollinger Band's top right here. It wasn't willing to break it. Wasn't willing to pass this this extreme right here, and it ended up dropping back below the downward trend line and then crashing after we saw this blood diamond here with the red X on it and a fear symbol. Once again, it's hard to tell how much. Like it would have been hard to predict that. Sometimes, like maybe you're a trader where all you needed was to see an irregularity like this, and that's enough for you to go on. But I mean, I personally wouldn't. What you could do in a situation like that, and how I like to trade, is if you are unsure but you think there might be something going on, the key is when you and we're going to get into a lot of different trading good habits in different videos, but one of them that I can't stress enough and that I'm going to mention right now: never all in buy when you buy something. If you have $10,000 you're trying to spend, even if you think it's the world's best time to buy in, never do more than 10% in one purchase. So the main reason you never want to do more than 10% in one purchase is, if you're right, that's amazing. You're going to make some decent money off that. If you're wrong, it's not too big of a deal. You can do some math calculations, buy back in at lower, and keep lowering your average strategically. And then when you do sell, even if you have your same target zone for the price, you're going to make more profit, or vice versa. You can lower that target zone and still maintain the same profit level, but it doesn't have to go as high up. So it's always smart to buy in increments. And what you can do too, which I like to do, is I have different conditions for how much I want to buy. So some, like I consider like a strong buy location where maybe I'll purchase 3 or 4% of what I want to buy. And then you got weak purchase locations that maybe it's like 1.5% to 2%. And then I like to grid trade too, where it's usually about 0.5% to 0.25% for each of the grid trades. And overall it adds up and it ends up lowering your average quite well and gets you a really good buy-in even if you were wrong. So even if you're wrong, usually you were right enough that it was still decent, that you're going to end up getting a pretty good entry price. And if you're right, you didn't get that much of it, but that's okay because you were right and you got some, and it's better than nothing, and you're going to make some profit off that. And the key is if you diversify, especially if you have some trading bots doing some stuff, and you're doing this in more than one pair, potentially on more than one exchange, and also in stocks just to diversify and lower risk, you're going to be seeing quite good results in no time. So the key is just identifying locations that you like and deciding how much or how little you want to purchase at any given point. Apologize once again, I am outside, and yes, there is some background noise going there. So let's do maybe one or two more just to identify good entry and exit points. So you might be wondering, was this a good exit point? And it is, clearly, but it's not the easiest to identify. I mean, you probably could have identified it right around here pretty easily, but would I have identified it right on here? No. Oops, sorry about that. Yeah, I probably would have ended up exiting here, only because at this blood diamond, there's still just not enough information to go off of for me to say that that's a good exit point. Yeah, your RSI is high, and yeah, this is your fear greed index is decent and it's neutral, but your RSI and MA is still a little bit too spaced for my liking. This isn't really as high as I'd like it to be, and it's neutral right now. Ooh, once again, sorry about that little interruption there. So yes, if we look here, so that is the 31st of March. So let's just expand this up and go to the 31st of March. So yeah, your buy volume is still greater than your sell, but it crossed down over by the 6th of April, which something tells me it's one day after this, yeah. So, but it was pretty close right before then. So yeah, this either here or here, I would have gone in, or I would have canceled, because you also have the RSI basically crossing under at this point too, and the volume, and the mountain's already finished. Our mountain's moving average line is already verified, confirmed. It's very bearish now. High levels agreed. Yeah, that's a good exit point right there, or right there. Either or would have been good. You're almost at the basis line. Here you're already below the basis line, so you know it's not going to stop just at the basis line because you're already past it. And you got the nice red cross. So, that's definitely a good exit spot right there. Maybe if we can try to find one more entry spot before my computer dies here. We got 4%. Okay, I think we can probably do it. That's that's actually a good one. This is an interesting one. So let's talk about this one. Here is a pretty unique one. So, and this is a really good entry point, clearly. The mountains are beautiful. That is literally pretty much the perfect combo. Blue is touching the bottom red line. Green is all the way under. You got both of them. They're not in the same candle, but they are super close. That's a nice curve in there. Volume mountain is very high. That's beautiful. Her RSI is super low, and it looks like they have already even crossed over here. If not, they're just about to, but super, super low. We are unfortunately hitting neutral here, but that's not bad. That's just because for the fear greed, it's just because we already got enough price movement that it's no longer full fearful, but we just had a fear signal here and a really big bearish candle that also triggered our boom meter not once but 2 candles in a row, and then followed by the recovery momentum boom meter candles that are the purple ones. So yeah, that generally indicates it's going to do pretty well. So that is a pretty good time to get in. And it also, our buy volume did look to be either on level or still just a little bit under it at that point. But that's okay, because Yeah, it was just a little bit under it there, but that's okay. I still would have deemed that was a pretty good spot to go in, just because our volume was so high on our YinYang B's mountains there. All right, I think we're gonna call it a day there on this video. I hope this has given you an idea of how to find your entry and exit points, and yeah, if you want to sign up for our indicators, there'll be a link to our website in the description. Also, a coupon code you can use for a bonus 5% off. And if you haven't already, join our Discord. We have lots of information in there about news, geopolitical news, price predictions, trend analysis. You can ask as many questions as you want. Very helpful, happy community there to help. And there's affiliate codes that are advertised there that'll get you a bonus 5% off at checkout. So yeah, join us now if you haven't already. And thanks for watching. Have yourself a great day and happy trading.